Whenever you hear about this Republican tax plan in the media, and probably also from me a bunch of times, it would be referred to as a $1.5 trillion tax cut. And there's a precise reason for that it would add roughly, over the next 10 years, $1.5 trillion to the deficit. So the amount of tax revenue that's coming in falls by $1.5 trillion. So we call that a $1.5 trillion tax cut. But that actually masks the size, scope, scale, and audacity of what's really happening here. In fact, it's actually, if you look at the numbers I did in this story today, it's a $6 trillion tax cut over 10 years. Now, let's put that in perspective a little bit. The Republicans, since Obamacare was passed, have been saying that the Affordable Care Act represented the biggest tax increase in American history. This has been a talking point since they passed the law in 2010. And that's because it did raise about $700 billion in revenue over a 10-year period to fund the tax credits and for health insurance and the Medicaid expansion. So they discounted the other side of it that balanced out the trillion that was raised and said, well, look, this is the biggest tax cut in American history. And so using their logic, then okay, yes, look, this is a $6 trillion tax cut. Now, the reason it only adds $1.5 trillion to the deficit is because there are also $4.5 trillion that are raised over the next 10 years. So it's $4.5 trillion tax increase, $6 trillion tax cut. The difference is the people who are getting one are different in many ways than the people who are getting the other. And to understand that, you only have to look at the kinds of cuts that they're doing. So first, the biggest one is a $1.5 trillion cut to the corporate tax rate, about $230 billion for the estate tax. Currently, nobody who's inheriting any less than $11 million has to pay an estate tax. So by definition, nobody middle class is affected by this. You can practically list off the people who are getting the benefit of this. There are changes to the way that accounting is done on foreign dividends that cuts taxes by billions. You probably are not going to benefit from that. There's a reduction in taxes on businesses and people who set themselves up as what are called pass-throughs. And we're going to learn a lot more about pass-throughs in coming years, because everybody rich is going to start setting themselves up as a pass-through. They're going to say, I'm not a person, I'm a pass-through, because pass-throughs are going to pay lower tax rates than individuals are. That's kind of where the money is going. That's who's benefiting from this. The list is longer, but the estimates are that about 80% of the benefits of this go to the top 1%. Now, what about the revenue raisers, the tax hike that I talked about, this $4.5 trillion tax hike, the biggest tax hike in American history? Where does this, who is this hitting? Well, about $1 trillion of it comes from getting rid of the state and local tax deductions. And currently, the way it works is state and local governments are funded with subsidies from the federal government, because the tax money that you pay into the state is then deductible from your federal taxes. So, in other words, roughly speaking, for every $2 that a state puts in, or a city puts into the schools, the federal government is putting in $1. So the federal government is just stripping all of that out, and that saves them. That's $1 trillion. So that's on the backs of people who need public services, who send their kids to public school, who ride the bus, who ride the subway, who don't have private security guards, and an entire privatized kind of 0.1% lifestyle. So that's a trillion. That's where $1 trillion comes from. They raise another $300 billion by allowing, on a one-time basis, foreign money that's stashed overseas to come back into the United States. They call it repatriation. So think about that. That is a way that they're raising money to pay for tax cuts. But all of that $300 billion that's overseas. They should have been paying taxes on it already. They're just dodging the taxes. But now that they're bringing it in, it's going to corporate profits. It's going to share buybacks so that they can drive up the price of shares. And it's going to go to dividends that are paid out to shareholders, executives of the company. So this is $300 billion that's going to come in and go to these extremely wealthy people. But the $300 billion goes to the IRS, that's 14% of the rest of it. So the rest of it, you can do the math on that. It's more than $1 trillion is going to go to these rich folks, and then they can say, well, we raised $300 billion, so that justifies cutting $300 billion in taxes over here. Elsewhere, everybody who files a tax return gets what's called a personal exemption. If you've ever filed your taxes, you've noticed this. You get that one. You put a 1 there, and that 1 is money for you. It's about a $4,000 deduction. They're repealing that for everybody. So even though it's equal across the board, it's actually very regressive, because if they're giving you the same tax hike that they're giving to Jeff Bezos isn't going to feel it, but you're actually going to feel it. And here's where these idiots might have messed up. Because you're now changing the exemptions are the way that they decide how much they take out of your paycheck. So they're doubling the standard deduction, but it's hard to. But your company can't know exactly what you're going to deduct if you're going to itemize at the end of the year. They're supposed to go by the number of exemptions that you have. Since they repealed one of the key exemptions, most people are probably going to see more taken out of their paycheck as a result of that. So after Trump's tax plan goes in, you're not getting a pay cut, but your paycheck is going to be lower probably. And when that happens, people are going to notice. People know what their paycheck is supposed to say. When it says something different, they get pissed. And when they find out that the reason it says something different is so that these $6 trillion in tax cuts can be funded, they're going to be extra pissed off. You can go through the rest of it, but the more egregious ones are they just go and pick the pockets of teachers. Teachers currently can write off the pencils and papers that they buy for their students. They're no longer going to allow that. They're not going to let people write off medical expenses. They're not going to allow people to write off certain amounts of mortgage interest. They're not going to let people. What are the other ones? Oh, the student interest. You're no longer going to be able to deduct that. So they're nickel and diming the middle class. But the middle class here gets a tax hike. The rich and corporations are getting a tax cut. The last irony, guess who else is getting screwed in this? Farmers. Farmers are going to see higher tax bills pretty much across the board, and they fought hard against it, and they lost. So, people warned Trump supporters. Look, this guy is not in your corner. This is a tool of the oligarchy. They didn't listen, and now they're going to get slapped with bigger tax bills.